Hello, legacy builders, and welcome back to another episode of the Legacy Pregame Podcast. I'm Marcella Mollon-Williams, behavioral financial advisor, mindset coach, and legacy strategist for first generation legacy wealth builders.
And I am Mark Mollon, investment advisor, strategist, and we are your legacy building duo, helping you build not just financial wealth, but generational impact.
Absolutely, we are. And in previous episodes, we've been walking you through the legacy pregame framework. We started with L, the legacy lens, and then moved forward with E, emotional mastery, generational goals, G, and A, alignment audit. Where are we now, Mark?
So today we're gonna use the letter C, and that is for capital strategy. Now, this is the part where we talk about how your money should be working for your mission, not just your lifestyle.
That's right. And as always, we're going to keep it real with you. So
Mhm.
let's talk to first gen high earners. Too many of you are making good money, but still building fragile wealth. You've got the income, but no real strategy for how to keep it, grow it, or pass it on.
Exactly. So, Marcella, they're in the game, they're on the field, but they're playing without a playbook. And, here's the truth. It's not enough to just earn it, right? So what you want to do is you want to have a position where you are implementing multiplication, you're multiplying, you're preserving, and you're positioning your money to serve your legacy. And this is why capital strategy matters. It's not just about getting rich. And unfortunately, with social media and news outlets and everything, that's a big push to focus on the rich aspect and what it can do for you today. But what we're about is helping you build a resilient financial system that supports your family now. That's important, but long after you're gone, right, Marcella?
Yes. So let's look at what is capital strategy. Your capital strategy is how you use financial tools to align with your legacy. The two must come together. And today, we're going to break it down into three areas in particular. We're going to break it down into life insurance, investing, and estate planning.
Yeah, we're going to actually filter each one of those through the wealth framework. It's simple, powerful lens made up of the following. So let's break down each one of those.
Yeah.
You have number one, no particular order, but number one
Mhm.
is your rate of return. So are your assets generating historical returns? Then we have safety of principles, right? So that is your money protected from loss? And now, one of my other favorites is liquidity. Can you access your funds quickly without any penalties or tax consequences? And then, lastly, we have tax advantages. I think everyone's going to relate to this one, right? Are you minimizing your tax liabilities with smart vehicles? So, Marcelo, let's dive into each one of these.
Yes. So we're going to take these three areas that we talked about and filter them through the wealth framework. So let's start with life insurance. This is your family's first safeguard. And we're not talking about the bare minimum term policy your
Mhm.
job gives you. A lot of us just stop there. And we come across that all the time with our clients. We're talking about real wealth transfer tools here. Again,
Mm.
wealth transfer, legacy wealth transfer. Properly structured life insurance isn't just about death, it is a powerful living strategy. It can provide liquidity, protect your income, and build tax free. Let me say this again, tax free
Mhm.
generational wealth. And I honestly believe that life insurance may be the most overlooked wealth building tool in our capital strategy. Wouldn't you agree?
Marcel, I cannot agree with you enough because it's so true, and part of it has to do with the industry, how people have experienced life insurance with agents and everything, and that's one of the things that separate Marcel and I from many uh, life insurance agents out there because we're very specific, we're very intentional in how we're utilizing the strategies out there, such as life insurance, when it comes to the wealth framework. And so let's talk about how life insurance specifically addresses the 4 points of the framework. So Remember earlier we talked about rate of return, right? So
Mhm.
with whole life or index policies, returns can be steady and predictable, depending on the specific strategy or product you're using. So you're going to get those rates of return. That's a check right there. Number two, and this is a big one, safety on your principal. Your principal is protected. It's built into these type of strategies. So you're guaranteed not to use, and it's rare that you could say this, but you're guaranteed not to lose your principal as long as you're paying the premiums. Your principal is protected while still earning the rate of return that we talked about before. Then you also have liquidity, being able to access the cash value inside the policy without any penalties. And equally as important is the tax advantages, right? So I think we all understand at this point, hopefully, that death benefits are tax free. But guess what? You have to die in order to get that benefit, right? But with cash value policies, while you, the owner, are alive, you can benefit from the cash value in a manner that has tax advantages, such as
Yes.
borrowing money from the policy to use to build your legacy and not have to deal with certain tax consequences. So if you're not thinking about life insurance as a part of your capital strategy, then you're just leaving the door wide open for your legacy to just leak out. And we want to capitalize, we want to optimize what you're doing today so that your generations can benefit from it, right, Marcella?
Yes, Mark, and I think so many people really aren't taught enough about the living benefits of
Yes.
life insurance. That's
Yeah.
where it's a bit cloudy, and we're going to touch more on that in episodes to come. Just really how to use it as a legacy wealth building strategy. I know for Mark and I, we have multiple life insurance policies as part of our capital strategy for our family and our business.
Hmm.
And we want to make sure that you're clear on how to do that. So we'll definitely touch more on that. But in the meantime, let's move on to part two, and that is investing. So when we talk about investing, we're not talking about chasing trends, which unfortunately we see too much of. It's about building with intention.
Precisely, Marcella. Again, when it comes to your investments, we should be reflecting on your risk tolerance, your time horizon, how much you have. If we're talking specifically retirement or short-term investing, what does that look like? And as everyone here, you're listening to us, you're watching us, so you are legacy minded, then you want to make sure are your investments aligned with your legacy goals? It's all these things that we have to look at here. And so it's about having a smart allocation or asset allocation, to be more specific, not just random speculation. And when we say speculation, what we're referring to is just, Marcella, you touched on it, right?
Mhm.
As far as what's trending, what's hot,
Yes.
these type of things. So let me be more specific here. We want you to aim for more historical returns, right? This is one aspect when it comes to investing. When we use the phrase historical returns, we're talking about going back as far as possible in any investment. In this case here, I'm going to use the market. You're going back as far to study the movements of the market. What has the market trend or return in the last 10, 20, 30, 40? We're talking about decades to really get a comprehensive idea of markets performance. That's what we call historical returns. That way you have something to back it up. And there's a lot of strategies out there that are so new, they don't have historical returns. So whatever they're telling you their returns are, they're not legitimate because there's no history to prove that. So again,
That's
we want to
right.
be very clear. We're talking about historical returns. Another aspect that we want to add to investing is, protecting your principal. Can you do that at the same time? Right? Or in a combination with strategies so that you're getting a rate of return, you're also adding protection to your principal and maintaining liquidity while at the same time taking advantages of smart leveraging when it comes to tax strategies. So let me give you some examples here. So some of you may be familiar with Roth IRAs. You've heard the term IRAs. I want to talk specifically Roth IRAs because that is a structure of financial vehicle that's geared more towards retirement. So for this capital strategy, we can look at a Roth to allow you to achieve a rate of return. So we talked about that, right? A historical rate of return. We also want to make sure that you have some liquidity. And with a Roth, you do have some liquidity on your principal, right? And then also you're taking advantage, and this is one of the biggest aspects with Roth, is that it is a tax-free vehicle, meaning the dollars you contribute into your Roth today, well, you've already paid taxes on it. So you're taking your after-tax dollars and you're funding your Roth. The money grows tax deferred. So any returns on your investment is deferred. Now, here's the best part. When you take money out at retirement, all of the money, what you've put in your contributions and also what's earned inside that account are now all tax free. And let me tell you, it doesn't get better than tax free, right?
No, it does not.
Yeah, we
We
love
like
ourselves so tax free. So
we do.
you're seeing some of the benefits, but at the same time, in this particular case, if your money's in the market, you are subject to positive and negative volatility. That means when the market goes up, you are seeing the potential of those upside volatility. But then if the market goes down, you are subject to those downward motions of your investments of the market. So this is where we can look at other strategies like a life insurance product, such as a cash value product like an IUL, an
Yes.
index universal life, or a whole life policy. Depends on your specific needs. These are type of policies where you're still going to get a predictable, in some cases, predictable rate of return. So you're still keeping up with inflation. You're getting a return, positive return on your money. But here's the thing: you have that principal protection. In other words, whatever money you put in and whatever money that's earned inside that policy is protected from any negative volatility of the market. In other words, you cannot lose money inside that vehicle, right? So now what are you doing? You're covering rate of return, you're covering asset protection. You still have liquidity on your fund. So that's giving you maintaining your liquidity, and you're taking advantage of tax strategies because in these cash value policies, you can you can have access to these funds in a tax-free manner. Again, it's checking all the boxes, right? So, and there's so many more other strategies out there that can help you bring wealth. And a combination of all these things can check all these boxes. Again, we want to make sure that we're emphasizing the importance of your wealth framework because, look, these are tools we're talking about here, not toys. And so
Eh,
we want to make sure, Marcel, as you always say, right, we want to be
yeah.
intentional, right?
Yes, and I just want to jump in here because there is so much more that can be said about this, and in future episodes, we are going to cover a lot more details when it comes to these strategies. I want to point out that and the importance of everything that you just talked about within using the wealth framework that we're providing for you, these four parts, and filtering your investing process.
Mhm.
Why this is so important is because you will naturally defer to your investor biases
Mm.
without a framework, a guardrail, a system that will help you to stay on track. And when I say investor biases, I am talking about the unfortunate predisposition that we have to rely on ourselves and our intuition and what everyone else is saying in order to make investment decisions, which can be detrimental to our long term wealth building desires. So, Mark, we're going to get into more detail about
Oh,
investor
I
biases
am so
in the
looking forward to
future.
that. I am so looking forward because it's needed, as you said, Marcella. It is so
Absolutely.
needed with all the built-in biases that we all have. Every one of us have. And so, and Marcella, I just want to add as well the
Mhm.
importance of why you are a behavioral financial advisor because that plays such a significant role when it comes to our money making decisions, and yet it's a subject that's not addressed enough. So I'm
Yeah.
so glad that that you and I are coming together to be able to provide not just one aspect, but a holistic aspect that's covering mindset, vision, goals to create a true legacy plan that lasts generations.
Yeah, so good. Well,
Mhm.
we're going to move on to part three, which is estate planning. This is where we want to bring the conversation and land it here with estate planning because it is an absolute must. Here's what people forget: probate. Probate is not a process you need to go through. It is a problem that you land with when you don't plan intentionally. We don't want to go there, do we, Mark?
No, we do not. And Marcella, you brought up such a good point here that number one, I don't think enough people are aware of what happens when you go through probate. Number one, and we're not even going to cover it all. We're just going to keep it simple today. So number one, it's a slow process. And
Mhm.
and Marcella, I know you have a list of, you always have these stories about celebrities and everything that gone through these type of things of poor executed plans, and how the families have to go through years of probate. The other aspect of it is that your information is public. And in today's age, this is one of the areas that really scares me, because that means anyone has access to your information when you go through probate. And I can tell you right now, there are too many characters out there that want to use that to weaponize that information to take advantage of you.
Absolutely.
So we want to protect your what you've worked hard for, right? By not having to go through probate. But if you do, it becomes also expensive, because you're going to pay somebody, right? So either you take care of the cost by creating a proper estate plan, or the state will bill you and they will do it for you, right? And let me tell you, Marcel, we always have this saying, right? That, if you don't have a plan, you have a plan. It's the state's plan. And I
Mhm.
don't think they're going to have your best interest in mind, right?
Not at
So
all.
a strong estate plan includes a will, a health care proxy. You want to make sure you have a POA, or power of attorney, and the trust, right, Marcella?
Yes, trusts are so important. And you said a lot there that I'm going to touch on. But first, I just want to start with just emphasizing how important the trust is for legacy wealth builders, because they give you the control that you desire from the grave, from beyond. So long after you're able to still protect your assets, set terms and conditions for your family members, minimize taxes,
Hmm.
again, what we love, and guide your family members, guide the generations on how the wealth will be received. This is where you go from an inheritance to a legacy. There is a clear difference, and we want that. Having a trust is not enough, though, and this is where a lot of people get stuck. And we've seen this, Mark. You have the trust, but then you do nothing with it. You fail to fund the trust. And as Mark mentioned, I love reading the celebrity stories of, again, the celebrities that have been deceased, who are deceased, and the estate planning drama that comes with it, unfortunately. I'm not celebrating that part, but because we're aware of, and both Mark, you and I, we look at these things because we can learn from it, and we can help our clients avoid so many of these situations that have occurred for people like Michael Jackson. That was headline news. Whitney Houston, Heath Ledger.
Yeah.
These individuals had a trust, but they did not fund the trust. So they went through all the steps. They thought they were good, or maybe they planned to get to it eventually. But
Mhm.
unfortunately, eventually it never came. And when I tell you, to this day, the Jackson family is still dealing with a lot of the drama. Heath Ledger's family, it was fortunate that the family worked together to make sure his daughter got what she needed. But the way it
Mm.
was set up, she was not going to get anything if the family did not come together to make sure she got an inheritance. So there's just drama that comes with not putting things in place, not funding your trust. And for the people that you say you love and care about, that's not the kind of drama we want for them.
Marcella, I think too many times people assume that the family is going to unite, or they're going to assume that people understand what they want, or they're just going to assume. The key word here is assume. It's always floating there.
Yeah,
And
yeah.
that's not a plan. So when you're creating a trust, that's one aspect. But putting the assets in the trust is another level, right? It helps to facilitate the actual trust. So in other words, if the trust is empty, if you don't fund the trust, it's just a piece of paper. That's all it is to say you have a trust, but there's nothing in it. So you need to fund it, whether you're using a life insurance strategy, investments, property, whatever assets that you want to be distributed under your terms, the vision, the instructions that you have, whatever you want, you have to fund that. This is the chance to pass on more than money. I can't emphasize this enough because, as Marcella and I have said, that when we're working with our clients, when we're doing holistic planning to help create that legacy plan for our clients, and we're applying life insurance and these type of things, the number of times we have to focus on, okay, you have money you want to pass on. What is it for? What is its purpose? Because money in itself is just a tool. What do you want that tool to do? Right. So it's not just about passing on money.
All right.
Think about passing on, you know, discipline, passing on values. Here's a big one. How about passing on a vision?
That is so powerful. Passing on discipline, values, and vision.
Hmm.
That's what comes with money in order to leave a legacy.
Yeah.
So, legacy builders, let's move forward. And Mark, we're going to take them through our 3-step pregame practice as
Let's
usual.
do it. So the
Yes,
journals, get your journal. If you haven't been taking notes, you should have been taking notes already. But if you haven't, get the journal out, get your pen or your writing utensil or tablet, whatever device. But Marcella, let's get in this.
let's do it. Let's do it. Let's activate our capital strategy. And we're going to start with the first step. And we're coming with questions here. So we're going to
Hmm.
evaluate your wealth protection plan. So ask yourself these 2 questions. Do I have the right type of life insurance and the amount of life insurance in place? So, do I have the right type and amount of life insurance in place for me and my family? All right. And then, is my income protected in case something happens to me? Is my income protected in case something
Hmm.
happens to me?
Right. So if your answer is no, or you just don't know, then your first step is to contact us. Because
Mhm.
this is an area that a lot of people, you just don't know how to even quantify the question, right? Well, how much is the right amount of life insurance? You know, how do I know if my income is protected? But this is when you want to talk to a seasoned life insurance expert, which is Marcella and I, and we can help assist you with that so that you're not trying to figure it out on your own, right? That you have help, you have support, you have an expert working with you to make sure that you are protecting, you have a wealth protection plan. All right,
Absolutely.
step number 2, Marcella.
All right, Mark. Step number 2, we want to map your wealth vehicle using the 4-part wealth framework. That's what I'm saying, 4-part wealth framework that we just took you through. So this is how. Make a list of your major financial assets. So whether you have investments, savings, retirement accounts, policy, make a list of all of your financial assets. And now you want to filter them through your wealth framework. Again, we're talking about rate of return, safety and principal, liquidity, and tax advantages. As you look at each of your financial assets and take them through these 4 steps, recognize, are there any gaps there?
And that's a big one, Mars. Actually, I keep saying this all the time. That's a big one. That's a big one. But yes, they're all big ones
They're
when
all
it
big
comes
ones,
to
Mark.
right when it comes to achieving your legacy goal. And here's the thing: this one practice can expose you to whether or not you're in a position to build your legacy or just collecting assets.
Mhm.
So here's the thing: this is why when we mentioned earlier about taking actions, taking steps, we are help to help you discover those gaps. We're here to assist you to make sure that there's not anything falling within the cracks that's going to impact your legacy. It might be perfectly fine right now, but when we're talking your kids and your kids' kids and your kids' kids' kids, and then so on, there's a lot of room that can leave for errors and omissions, right? So we want to make sure that we are addressing these things. And guess what? Marcella and I are here to help you make sure that we can walk through the process so that your vehicle is checking all of those four parts of the wealth framework. All
Yes.
right. Step number three.
All right, Mark. Step number 3, we want to set a wealth transfer intention. Remember, legacy builders are not here to just collect assets. We are building a legacy. In order to do that, you have to set intentions for how that wealth is going to be transferred. So ask yourself, who do I want my wealth to benefit? What values do I want passed along with it? We've covered this in previous episode, but now we're bringing it back up again, tying it to the capital strategy. Very important, the values with the capital strategy here. So the third question is, what part of my estate plan needs to be updated or started?
Mm,
So not just updated, maybe you've started and you need to update it. Again, when we talk about funding that trust, maybe you didn't get to that yet. So you want to make sure it's updated. And if you have not started yet, now is the time.
So
Mark.
I love I'm going to emphasize the updating because this is a conversation that Marcella, you and I always have when it comes to just updating in general. The importance of updating your life insurance policy beneficiaries, as Marcella said, your estate planning, your trust, even on your retirement account, the beneficiaries that you need to update because of new member of a family, a death in the family, all these different things. But when it comes to estate planning, this is one of the areas that a lot of folks ignore or just forget about it, So it's
Mhm.
important that we're updating this. But let me add another piece here. For Marcel and I, this is not just about you leaving behind stuff, right? Items, tangible things. We want to help you understand the importance of leaving a structure. So we want to, when we say structure, we're talking about leaving behind, as we said earlier, right, that vision, right, your intent, the establishment that you want your families to build upon. And the best way to do that is through the power of a trust that's properly funded and estate plannings. All these things. You see, Marcel, there's a lot of stuff we're sharing here. And so,
Yes.
we can't emphasize the importance of why we're doing what we're doing, right?
Yeah, we've given you all a lot to process. But I want you to really realize that this is your pregame. So often you may listen to podcasts and like, man, that's some good information. And I'm the same way. I listen to some great information, but we have to now move past just reflecting
Yes.
and get ready. So in your pregame stage, it's about getting yourself together, ready to take action. So your capitalist strategy should shout your legacy as you're putting it together. And it can no longer just be a thing that you think about, that you desire. We are giving you the steps to take action now.
Hmm.
That's what we're here to do. And as we again talk about action, I do want to pause for a moment and do our pregame reflection, Mark.
Hmm.
And just some more questions to think about because I really do believe that this is the best way to really help you take action. Sometimes we don't even know what we don't know. We don't know how to
Exactly.
move forward with things. So
Exactly.
let me give you a couple more questions so that you can add to your journal. So let's start with asking yourself, do I have a clear plan for preserving and transferring my wealth? Okay, we covered that. So just kind of be clear. Do I have a clear plan for preserving and transferring your wealth? All right. And then is my life insurance building generational wealth or just covering burial expenses? Really important to get clear on what your life insurance policy is actually going to do for you as a legacy wealth builder. And then the third one is if I pass tomorrow, would my family be financially stable or financially stressed?
Hmm.
Ooh. So
Yeah,
I'm
you
giving
saved
you
the best for last, right? You said,
yes. I really want them to reflect on that, Mark.
yeah,
Where will your family stand if anything happens to you tomorrow? I know it was tough. I know, Mark. I know this is not what people want to think about.
yeah,
But, this is our job. We are here to think about the tough things. We're here to ask the hard questions, and we're here to help guide you through the things that you don't even know to think about. That's why we're providing you with so many questions to ask yourself, because we realize that's, as I said earlier, sometimes you don't know what you don't know.
exactly. And Marcel, just to add here, when it comes to our community, we're talking about legacy builders. I don't think, and I could be mistaken, but I don't think our listeners will struggle with this too much because they're already of the legacy minded. Like you are thinking about your family. What
Yes.
Marcel and I are bringing to the table are, what do you need to think about? Right? What are the specific, because remember, we want to be intentional here. So what are the things we should be asking ourselves? And guess what? That's what Marcella has given you, that the right questions to now move you in the right direction.
Yeah, great point, Mark. So, legacy builders, if this episode made you think deeper, go download your Legacy Clarity workbook. And I'm happy if it didn't make you think deeper and if these questions really hit you hard. But the Legacy Clarity workbook will help you go even further because the capital strategy section will help you reflect and rate your clarity on everything we
Mhm.
covered today. You can reach out to us in addition if you have any questions. That's what we're here for. So, again, if anything really stuck out to you, go through your Legacy Clarity workbook and reach out to us.
Exactly. And if you haven't already, subscribe to the podcast and leave us a review. It helps others like yourself find us and get equipped for their journey when it comes to legacy building.
Yes. So, next time, in the next episode, we're going to wrap up the framework with why. Right, Mark?
Hmm.
What is
The
why?
letter Y.
That's right.
Not the question, but
Not
the
the
letter
question
Y.
why, although begin with why is great.
Right,
But
exactly.
your next move. It's all about what you do now to activate everything we covered. And we've been kind of hinting at that the entire time, right, Mark?
Yeah, we
Just
have, yes.
taking action. But we're going to get a little further into it. So don't miss the next episode as we cover your next mood. Until then, live well, build wisely.
And make sure your money fuels your mission.